I wonder what you make of the move we are seeing today and whether you view it as overdone, considering that the catch-up of flows, if you will, is something that has not yet fully materialized.
Hi, Kaylee and Joe, and happy Friday. Yes, here we have another instance. And really, what's remarkable about this conflict is how repeatedly successful the administration is, and they had an assist from the Iranian foreign minister in inducing optimism and sell-offs in crude, rallies in equities through what we used to call in the markets verbal intervention. Let's just step back for a second. What has really changed? The blockade by the United States remains in place. Even the Iranian foreign minister clarified, yeah, the straits are open, come on through, except you have to go through the toll booth and you have to comply with the Iranian armed forces, which means it's closed. The Iranians have also said, look, if this blockade stays in place, all bets are off. So we've had very good headlines, very pleasing headlines. In this market, your previous guest, he had it right. He said, look, traders want this to end. This is a nightmare that no one thought was possible, and they can't believe is happening, and they just want it to stop. And so this is a market that's amenable, it's receptive, it's responsive to positive verbal intervention, and today is a great example of that. I think it's unwarranted. Unless we have a real breakthrough here this weekend, I think it's going to reverse, and I think we still have the world's largest oil disruption, which actually got a little bigger with the blockade on Iran's oil exports, still in place, and we have to deal with that.
Unwarranted, says Bob McNally from Rapidan. Bob, as you always say, it's all about the barrels. Even if this war ended now, say there's a deal this weekend in Islamabad, how long would it take for the market to rationalize itself back to the level of traffic we saw in the Strait before this began?
Joe, optimistically, so no more, no incremental damage to facilities, et cetera.
Yeah.
3 to 4 months at least on the oil side. For natural gas, Ras Laffan, my analyst tells me, Alex Munton, it could be years before those two trains are repaired. So gas, it could be longer. And in some cases, we may never get back in certain fields, like Rumelia in Iraq. We're concerned that huge field may never get back to where it was before, or it won't because we won't spend the money on it. On the other hand, other fields, believe it or not, come back stronger. You let them rest and actually come back stronger. So, but we're talking 3 to 4 months at least before the fields, the facilities, and the boats sort of queue up and line up and start getting things moving again. And even then, I would say, there will be a security premium because we will have learned Iran can do something that no one thought possible, or few did. As you know, Rapidan saw this, but few thought that anyone could strangle Hormuz for more than a couple days. Iran shows that it has, and it could again in the future.
Well, so let's get to then the shortages that either we are already seeing, which arguably we are, at least in certain parts of the world, or have yet to materialize. Bob, knowing that there obviously is a lagged effect in energy products leaving the Middle East in the first place and getting to their end destination, those shortages are starting to be felt now. The IEA obviously warned yesterday that Europe could run out of jet fuel 6 weeks from now. Where will you be looking to, and what products do you think are going to have the most acute shortages first?
Right. It reminds me of COVID a little bit. When that started unfolding, it started in Asia. They had all the problems, the lockdowns and the pain, and we watched that. And then it rolled into Europe and then came here. And it's going to be a similar phenomenon. The famine is first in Asia, especially in diesel and jet. They just don't have it. They're too close to Hormuz. They're too dependent on Hormuz. And you have the Chinese and the South Koreans are big exporters of jet, of gas oil, of diesel, and they've stopped or they've slowed down. So Australia is having shortages, and other countries are having to drop their petrochemical facilities. So we're seeing demand destruction right now in Asia. Now those desperate Asians are now coming into Africa and the Northern Atlantic Basin and pulling barrels out of here, and then they'll come to the Gulf as well. The president tweeted that tweet from Rory Johnston of all the boats heading to the Gulf Coast to pick up oil because it's the only gas station in town, if you will. And so it's coming here. We may not have the physical shortages like Europe may have in some places for especially jet fuel. Jet fuel is the real one. And what we're going to be watching is product stocks, gas oil, what the Europeans call gas oil, we call diesel, jet in the ARA in Europe, even the Gulf Coast. Those are Rotterdam. Those are the places we're going to watch for big inventory draws. And eventually, when all those boats show up in the United States, and we were within a whisker of all-time crude oil exports last week, a few 100,000 barrels a day away, we'll see our crude stocks go down because we're going to empty out and send those crude stocks out. And then it'll become real in a way that we're not seeing it yet in the data that we get here in the United States.
Why? So it sounds to me like you're suggesting that physical shortages are inevitable, but it's already too late to avoid them. Bob, correct me if I'm wrong, and I'm looking at a research note that you put out recently suggesting that China has large import surpluses to enjoy from before the conflict that eases some of the pressure on Beijing. Will China suffer the same fate as the rest of Asia?
No, China's doing better than Asia. China stockpiled like mad. They went on a tear for the last couple of years, importing oil and other commodities. So they have 1.2, maybe 1.3 billion barrels of crude in storage. Wow. Look, they're not enjoying the high prices. They're not going to enjoy not getting that discounted oil from Iran. But they are not facing the shortages that other Asian countries are. Indeed, they're on a case-by-case basis parceling out some of their precious refined product to curry favor with some countries that are starving in Asia for that.
Well, it's incredible to consider. And as we get back to the notion of, okay, China may be more insulated, other parts of Asia are going to hurt, Europe could be hurting shortly as well. Bob, we already know Europe had a problem post Russia's invasion of Ukraine as it was trying to wean itself off of Russian oil and natural gas, get more from the Middle East and the United States as well. Clearly, there's now going to be problems in everybody wanting to source it from places like the United States. Is there anywhere left to turn for the Europeans? Ultimately, if they can't reliably bet on exports from the Middle East, but they also don't want to have to turn back to Russia, and there's only so much that the U.S. is able to produce at this point, right?
That's right. That's why, unfortunately, it may not come in the form of, in some cases, it'll be shortages like jet fuel, but they will have to either pay the going price to bid barrels away from the Americas, away from here, bid those expensive barrels, or they will have to go without. And I think you're starting to see that. Refining margins in Europe are negative now. So refiners are starting to down tools, if you will, or reduce runs. And that's going to really create a situation where you have extreme price increases, and there'll be rationing to the people who can pay. And many people who can't afford to pay won't. And you're seeing airline flights, unfortunately, getting canceled. I'm supposed to go to London in May. I hope I go. But you're going to start to see market price-induced demand destruction even in Europe.